All right. Let's talk about zoning, ranging. Talk about this. Quick video, gonna be like 2-3 minutes. I'm just gonna show you USD JPY and gold, so you guys get a clear view on what ranging is and how I define ranging. Pretty much is just consolidation, and you can clearly see that USD JPY never came back to 111.5 and created double top resistance on the 15-minute chart, sent it all the way down here, and then created a new leg going down to 110.60. So overall, it is still a strong sell. USD-JPY came all the way back to 111.2. Now I expect USD-JPY to come back to 111.2 and try and attempt to break back to 111.5. But that's just what I see for going on before they release GDP tomorrow. So for a tight range like this, especially from the 23rd, which was Monday, and tomorrow would be the 27th. So you can see that this whole week of trading was nothing but mostly just scalping. And so obviously you're better off scalping this week versus following the trend. But the really good trend was when you sold. If you shorted USD-JPY at the very top, you can clearly see resistance here, shot down here, never came back to a higher price, shot even down lower, found support, shot back up a little bit, and then just shot right back down. And so that is a clear path. That's why I'm really focusing on the 15-minute chart with no indicators and just drawing two horizontal lines for the whole week. Because when it breaks, like I said, if it breaks higher, it's gonna break even. If it breaks out from the resistance price of either Sunday night or Monday, whatever the daily high is, and then you shoot for a higher price for the next resistance. But since it broke low here and closed below, then it's starting to close and then went down even further. So that's just another thing to take a look at right now. But ranging, like I said, or consolidation, I mean, this is just a pretty strong, very tight and narrow range for USD-JPY. And no, the other pair is a little bit different, but by looking at this, it's been ranging quite a bit. Same thing for gold. Gold, like I said, lowest price for gold was 12.18 on Tuesday night, and highest price was Monday. I think before London sessions or at London sessions, it hit 12.34, and then shot down all the way down here. Monday's price is here because this is 23rd, right? This is 23rd, and then shot right back and then came back to retest. Never broke higher. It just came back, but couldn't even close above here. So that's just another strong resistance of selling it back down. My plan is to keep selling gold for 12.24, and then for a possible attempt for the 12.18 price again. And then if it doesn't, then it's just gonna sit around 12.24 or 12.23 until the GDP gets released. So just look at Tokyo and look at London for another session of consolidation, because tomorrow is Friday and there's really not a whole lot of volatility, because the only day that we got the most volatility was yesterday. And so obviously it's not the best volatility because yesterday was a last minute meeting, and I don't like trading during those types of meetings, especially when it's last minute, because you get unexpected results and unexpected outcomes. So, but this whole week, like I said, if you were to backtrack on the 15-minute chart, you can clearly see from the 23rd and up until now, for gold and USD/JPY, they've just been ranging from a very, very tight price range. And I have my two horizontal lines listed for the highest price of that one day and the lowest price of that one day, because that's pretty much the highs and the lows for that week. Your weekly highest price and then your weekly lowest price. So weekly high and weekly low, so that you know that if it breaks your weekly high and your weekly low, then it's gonna go to the next highest price or to the next lowest price. And this is without using any indicators. By far, this is working out pretty good. I just decided to go no indicators this week because it's just been so confusing on consolidation. So by all means, I don't recommend anybody attempting no indicators if they don't feel comfortable. But once you get into it, then you can go ahead and make that adjustment. And I recommend reading the Naked Forex book because it's in the group info. Those that don't have it, I can send you guys the file. It's a free PDF file. It talks about naked forex trading. Pretty good book if you want to get into no indicators. And it explains a lot why indicators are too slow to catch on the move, regardless of any indicator. And so, other than that, I mean, like I said, other than that, then it's been a quick video. So other than that, I mean, there's really isn't a whole lot of swinging going on. You just have to trade for each session so that you can catch your money and catch your pips, and then that's it.